I'd say the biggest impact that this business is going to have is really digging into their labor costs and really digging into their pricing. And if you can get this model, switched and fixed, it could be wildly successful.
Well, hello and welcome back to the Clara CFO Group channel. A couple weeks ago, I did a review. And when I say review, I mean kind of a high-level walkthrough of a company's financials. I looked at their profit and loss. I looked at their balance sheet. I gave my commentary on just some really high-level stuff. On what I was observing from a CFO perspective. So you guys liked it. You guys actually liked it. And a lot of you said that it was super helpful and it brought up things that you could think about in your own business, even if you had nothing to do with being a bakery. So I'm doing another one. And today it is a salon and spa. Okay. So a salon and spa is the name of this business for today. We do that so we can scrub anything kind of personal from the business owner's financials. So we can just look at this kind of objectively from a CFO perspective. So we're going to go through the profit and loss statement and the balance sheet from 2021. And so we're going to talk through a number of different things. I'm super excited to walk through these financials today because there's a lot here. There's some good meat. And I think that all business owners could take little snippets from this and think about how you can look at your own financials a little differently and maybe think about how you can improve your financial situation overall. So if that sounds helpful to you, please go ahead and subscribe to the channel. And we're going to offer more opportunities to have this done in the future, but we're only offering this to our email newsletter list. So if you are on our newsletter list, you will see an opportunity there to potentially apply to have one of these reviews done for your business, but we're not putting it out on YouTube. So check out that in the description box below if you want to get on the list. And you will get weekly emails from us, and we'll also give you notifications about the latest videos. So that's kind of helpful if you might miss your YouTube notifications. All right. Well, let's go ahead and get into the numbers of a salon and spa.
All right. Well, here we are in the financials of a salon and spa. And we're going to walk through everything here. And I'm gonna be pointing out things that I think are important and things that I would look at if I was going through any business owner's financials for the first time. This would be kind of our initial high-level overview of what's going on. And so as I go through, I'm gonna be pointing out some things. I don't know all the answers to these questions, so sometimes the numbers just reveal questions and they bring up things that we need to look into. So you might hear me asking questions here and there, and they're kind of just meant to be somewhat lofty and like we're wondering about things. If we were having a live conversation with a business owner, we would talk these things out. But there doesn't need to be an answer to all the questions right now. We're just going to be going through and seeing what sticks out and what we think is important. All right. So again, when we start looking at financials, this is my favorite way to review financials on a month-by-month basis. So you can run a P&L and use it and look at it by month. I think this is super helpful as we just look to see what type of trends are happening, if there's inconsistencies. This will reveal if you're coding things incorrectly over the long run. And it's a nice way to look at a P&L. I love seeing a total column too, so we can always see year to date. One thing I want to point out is that this business owner got these financials to us in early to mid-October. So that means that they got their books closed really quickly, which is a great job for them. So they were able to give us full September financials by, a couple weeks into October, which is great. That's super timely, and we love to see that. All right, so the first thing I see that I really love is that they have their income line items separated out by different sources of revenue. So they are making money by renting chairs in their salon. They are also selling gift certificates. This might be also sometimes recorded just under general retail sales, but they are breaking it out separately, which is kind of good if you want to, make sure you're, really clear on how many gift certificates are being sold and keeping track of how many have been redeemed. Probably in their point of sale system, this is more information that they could actually break it out and see how many gift cards are actually outstanding at any point in time. But it's fine that they have this broken out here. Miscellaneous income, this is probably some interest income, something like that. And then retail sales. Since this is a salon, almost any salon you were to walk into, you would see products available for sale. That's a great way to add on and to be able to drive additional revenue after somebody's gotten their hair done and they said, oh, great, I loved that hairspray you used. Oh, we happen to have that right here. Those are those add-on sales that you can have. So, and they potentially have other products here too because they're also a spa. So they perform, I'm not exactly sure what spa services are provided. Basically, retail sales is currently about 5% of their overall revenue. So that is just kind of we're going to talk more about retail sales in just a little bit, but the bulk of their income is coming from salon services. So my assumption is that all of this is from haircuts, hair color, styling, things like that. And then spa services is definitely a smaller portion of their revenue, but fairly significant at 12.28%. All right. This is something I always like to look at because, we could spend tons and tons of time looking at one little tiny line item, but then at the end of the day, it's not that material. So one thing that you really want to focus on when trying to improve your financials is what is going to move the needle the most. You could try to save a penny here and a penny there, but really you want to look at what's going to make the biggest impact. So any changes to our salon services or an increase in price or anything like that is going to be mostly driving this line item. So this is something really important to keep in mind, your mix of your retail or your mix of your sales overall. And then rental income from the chairs. I love seeing this because what this means is that they are able to capitalize and bring in some income potentially on some chairs that are not being used. This happens a lot in the salon industry. So I love seeing that they're able to leverage that to be able to kind of cover some of their costs of their rent and not let capacity sit there completely unused. All right, so moving on to cost of goods sold. So cost of goods sold, just as a reminder, is anything that you spend in order to make your money. So products you're using, if you're selling a bottle of shampoo, what was the cost to buy that bottle of shampoo? And also, what was the cost to deliver it to the customer? So we're going to talk about some other things that you might see in cost of goods sold here or there. But ultimately, cost of goods sold is a line that you would not have if you were not selling a good. We're just going to, because this business is on cash basis, when something has cost of goods sold right here, how they're probably recording it is they are buying supplies, and then when they buy those supplies, they're recording it into this line item. Now, what's going to be really important for them is to make sure that they do accurate inventory counts at the beginning and end of the year, because that will help them accurately adjust their cost of goods sold. And we might go over that in a separate video, but what I want to make sure is that as they're buying goods, they are not overbuying and putting way too much product on the shelf. If you have too much product on the shelf, that means that some of your extra cash flow is essentially sitting on your shelves. So I could see how this could happen. Maybe if you have a very big space, you might like to have tons and tons of product, but you really need to think about how fast that product is turning, and you don't want to have too much sitting on your shelf, okay? Especially if you have, short reorder times. If you have short reorder times, you don't need to hold on to tons and tons and tons of inventory, especially if you're just selling an occasional shampoo or hairspray on a regular basis. I highly recommend people understanding what are their best sellers, making sure that they have those things in stock, and then, really being strategic about what inventory they're holding. All right, so this is a line item that, we're seeing right now. I would make sure that the business owner knows that they need to do that end of year inventory count and make sure they get an accurate cost of goods adjustment by the end of the year before they do their taxes. Now, their tax accountant is probably recommending that, but just wanted to point it out as well. What we see here is a 48% purchases to total money made from these retail sales, which is fine for a product. I think about 50% you would always want to mark up, probably at least 50%. I don't know exactly what these products are. Maybe some of them have a little bit better margins than others. But again, because of the way that cost of goods is recorded, I'm not exactly sure what the markups on their products are. But I would want to just say it should be at least 50%. All right. So hopefully in your point of sale system, you're keeping track of costs so you can know and make sure that you're not losing money on any products and you're properly marking them up to the right price. And you're buying them at the right price. You don't want to overpay and then you can't mark up the product to what it really needs to be. All right. So the next thing I just want to point out here is we'll get into expenses, is that they have left most, I loved the customization up here on the sales side, but on the expense side, it's kind of standard to what QuickBooks has normally. So it's just in alphabetical order. And I would highly recommend reorganizing the chart of accounts to put things together. So for example, I would try to make sure that anything related to the actual facility for the salon, let's say rent, for example, if we go to rent here and repairs and maintenance and maybe utilities, all of these things could be grouped together into a facilities line, and then it would have a subtotal similar to what you see right here, a subtotal so you could really easily see how much are we spending on our space altogether. Because if you were considering a move, you'd like to have that number really quickly and easily attainable, something like that. And all of this can be accomplished by organizing your chart of accounts. And we'll definitely be doing other videos on chart of accounts in the future. I do want to point out here, I'm not sure why a salon would have auto expenses. So this could be something I'm missing. It could be maybe they have a special van that they like to take around, or maybe there's something very specific business use for a car. But I would question whether or not this is an unnecessary expense, or maybe this is the owner's vehicle or something like that. I really would question whether or not this is a legitimate business expense. It might be, I just don't know based on what I know about this company so far. So it is 3% of the total expenses, and that is not an insignificant amount of money. This looks like it must be a fairly nice vehicle. I mean, if it's something like a Sprinter van or something like that, totally would make sense that these are higher dollar amounts per month. But I would definitely question this line item and whether or not it's necessary for running the business and if it's profitable for whatever it's actually doing. The second thing I wanted to point out is I think back bar supplies is probably the actual products that are used to perform the salon and spa services. I'm not totally sure, but I am glad that they're separating this versus just regular office supplies or inventory. Okay, so I do hope that they have some very clear way to know what is being used on the actual services and what's being used or sitting on the shelf for inventory. That's something you definitely want to make sure that you're really clear on when you're doing your bookkeeping, so you can have a very clear picture of how much material is being used to provide services. Technically, if this is what is actually being used during the services, you could put this up in cost of goods sold as well. Okay, so that's something to think about. Not everybody would want to do that, but I'm thinking, hey, I would like to know maybe for every dollar of salon services, I need to factor in 2 cents or 1 cent, 1.5 cents of back bar supplies. I want to know that metric, and I want to know exactly how much we need to plan for, because if we're looking at doubling our salon services, that potentially means doubling those supplies that we need to have on hand, and also thinking about purchasing those supplies, So I do want to just kind of point that out operationally to the business owner. It's fabulous that they don't have any bank charges. I'm loving seeing that. That means they probably have a free checking account and they're not getting hit with any kind of insufficient fund fees or anything like that. So I'm very, very, very happy to see that. And charitable contributions, that's kind of minimal at this point. That's totally understandable. Some people do those at the end of the year and some people don't do them at all. Totally fine. Commissions and fees is something that I would really like to challenge and ask a question on. I don't know what this is. So I'm not really sure if this is going to individuals or what this is, but I would have a question about that. I'd also like to say that this has been loan interest has been put on here. I would put this into an account along with bank charges and loan interest, and I would take out consolidated loan interest because that's actually the name of a loan here on the balance sheet, but we don't need to necessarily put a separate account for each loan. I would just put one loan interest account, and then any interest expense that the business incurs would go into this line item, and any interest expense from any of the different loans. But that's just a personal preference. I would also say that credit card charges, this is the actual merchant fees that are being charged for running a credit card. These fees could be considered a cost of goods sold and could move up here because this is a function of the total sales amount. Usually it's around 3%, 2.9, 3 and 3.5 at max. But we would like to see and budget for these going up and down with sales. And you would not have a credit card charge like this if you were not selling things. So I like to put credit card charges up here in cost of goods sold. It also helps us understand our margins better, which is why we like to see everything related to a sale up in cost of goods sold. And then, obviously for a salon, you want it to look aesthetically pleasing. You want people to enjoy their time there. So decorations totally make sense that there's charges there. I totally understand that. Let's see. Anything else? Nothing else really stands out at the moment. Right now, they don't have a lot of legal and professional fees, which is interesting. Must mean they're doing their own bookkeeping and potentially doing their own tax return. I would question whether or not they actually need some professionals right now. They might. So, if you're looking at budgeting for the next year, really consider whether or not you feel like everything's being done to the level that it needs to be. This is very low expenses overall for a business like this. All right, again, we would also go ahead and group together payroll expenses all together. So we have payroll services. This is actually the cost to process payroll, payroll taxes. This is the employer portion of taxes, and then payroll wages. I would say that these are probably not categorized correctly between the two, because if this was just taxes, this would be a very high employer tax rate. That's 40%. Probably what's happening is the tax payment that includes the employer and the employee portion is being recorded under taxes. But then that's kind of not giving you a true picture of what wages are. What I would like to see is I would like to see the employee portion of taxes be included in total wages so that we could line that up to gross wages that are actually paid. And then the employer portion of taxes would go into this line. All right, so that's just kind of another bookkeeping technicality, but it is something that would be helpful to be able to pull very quickly and see. And sometimes that can be done very quickly just through a adjusting journal entry or a sync, however you're running payroll. If you're using Gusto or using QuickBooks Online, you could just set up the recurring journal entry to make sure that it's syncing correctly and calculating that right. All right. The next thing I want to point out is they have this line item for QuickBooks, and so this must be just their QuickBooks subscription. I would say I really don't like putting a specific account for a specific vendor, similar to how we did consolidated loan interest up here, and they have QuickBooks here. You wouldn't want to have tons and tons of accounts for specific vendors. You wouldn't want to have QuickBooks line item and Zoom line item and Adobe line item. Instead, you would have a software account. And then under the software, you would classify all those expenses related to software would go into a software account, okay? Think of accounts as like higher level buckets, and you're going to have multiple things from different vendors going into those buckets, all right? Okay, overall, I think their rent is very reasonable. One of the things I really like is that their rent is actually mostly being covered by the rental income of the chairs. Just $2,050, and that's just the rent. That doesn't count repairs and maintenance or utilities or anything, but that's fantastic because that's one of a business's biggest expenses sometimes outside of payroll, and the fact that they have a lot of their rent really covered by people renting from them and subleasing these chairs is a great thing. All this other stuff is fine. I would comment to say that we have just a cleanup that needs to be done in the bookkeeping for subcontractors. So we've got multiple subcontractors, and they actually had people's names listed right here. So I took those out. I would just do one subcontractor line unless you needed to separate out between direct labor. So that might be somebody who's coming and actually performing services. Let's say you have somebody who's coming in and doing hair for weddings or makeup for weddings, or potentially, your massage therapist has her own business, but she's coming in to provide services for you. to kind of fill in for maybe a staff that's out. That would be considered direct labor. And so you might want to put that on a separate line item than somebody who might be hired to do some graphic design for you or come in and take photos of the space. Or a subcontractor, let's say you have a cleaning company that comes to clean, or you're putting something like that. You want to separate out the people who are directly serving your customers and then the people who are just doing other things for you to help your business run. So we would call that direct and indirect labor. But this definitely needs to be cleaned up. There's no reason to have like multiple sub-accounts here. It just looks like a little bit of an accounting error. Sometimes that happens when you start two accounts and you forgot you already started one. So it's just a very quick and easy cleanup in the chart of accounts. And your accountant could help you do this, or you could do it yourself just one by one. All right. And then it looks like they have a general supplies line item. Again, I'd like to really know what goes into regular supplies versus what goes into back bar supplies. My thinking is that this would be things like toilet paper and paper towels and maybe hand soap for the bathroom, things like that. So I would like to make sure that's really clear to the person doing the bookkeeping what goes into which account. So you have some consistency and you can plan for your expenses. All right, and then we have things like taxes. Not exactly sure what type of tax this is. It's probably some type of revenue tax. If they're in a state that charges business and occupation tax, it could be something like that. And then they have, looks like some type of licensing fee, something like that. And again, utilities that we talked about, this could be totally combined with rent and repairs and maintenance for a total facilities cost, so you could see that really clearly. And workers' comp, since this is a kind of typically based on labor and how many employees you have, how many people you have working for you, I would lump this up with total payroll costs so that you could really get a good picture of that as well. All right, well, overall, I would say the chart of accounts just needs a little bit of cleanup. Nothing really outrageous when it comes to expenses wise. I don't see anything besides maybe the auto, just really understanding that. I'm not seeing anything that's really out of line as far as like wacky or unnecessary or anything like that. I'm liking to see that, yeah, all these things seem reasonable if you're going to be running a salon. And net income, they're profitable almost every month. There might be some months maybe with 3 payrolls or something that it's looking a little, dipping into the negative. Overall, it's okay. One thing I want to point out to you guys right here, profit percentage is, we're doing it on gross. Let's do it on this one. Profit percentage is 6.3%. Now, you might say, hey, yeah, great. They churned a profit. That's great. It's okay. I just want to say 6.3% for a service-based business is really not enough. From this, they also have to pay taxes. So let's assume about a 20% tax rate. And then, this is not a lot to go on. It is $17,000 year to date of, usable profit. I hope that the business owner is paying themselves on payroll up here because if this is an S Corp, I'm not even sure, or a C Corp, because this is really not a lot of extra to do much with. And if the owner is trying to pay herself or himself on this money, it's not going to go all that well. So what I would like to see is I would actually like to see this being closer to 20%. So I'm going to see where is really our problem here. And I'm kind of thinking because our biggest expense, let's look and see how much is our biggest expense compared to revenue. Is it reasonable? Are we paying people too much? Are we not charging enough for our services? So I would like to know that. And what I'd also like to think about is who's working here. My assumption is that most of this are actual people who are doing hair, people who are performing spa services. These are mostly going to be direct labor people. And like I said, maybe a front desk person or maybe the owner is on payroll too. Essentially, these people are directly related to the people walking in the door. So I want to compare this labor to these two services. I don't really want to include, to do this calculation, I don't really want to include chair rental income. I don't want to include gift certificates and retail because these need to be profitable kind of on their own. So I'd like to look at just salon and spa services and see, are we paying people in the right ratio? So let's look at this. Let's look at the sum of the taxes. Sum of the taxes and the wages. And then we're going to do this divided by, we're just going to look and see what our cost percentage is here. All right. 75%. So what this is kind of meaning is that at this point, we're probably paying people, and this is probably, my assumption is that this probably has to include some owner wages in here. This basically means that if you were charging somebody $100 for something, you are paying out 75%. So $75 in labor cost for every $100 in services. This, my friends, is not sustainable. What we need to see instead is we need to see labor percentage to services to be closer to 60%. Okay, so 60% is probably the minimum that I would like to see. I would love to see 50%, but what I don't want is I don't want people to be underpaying their people. So that's, really key. We need to pay people well, but we also need to make sure that we're properly pricing our services or considering how do we add on services in order to increase overall profitability for each service provided, okay? So what I would like, I think this is actually one of the main reasons that this business is not more profitable. So I have a couple options for this business owner that they can consider. The first thing I would say is that they need to consider, who is included in here in this payroll. Is there anybody who's maybe not being leveraged the best way that they can? Are they wasting time? That's always my first thing. When you have employees and you're paying them on an hourly, the first thing you can really look at is time. Are you managing your time well? Are you paying people when they're not really doing work? Are you over scheduling or double scheduling? Is there any way that you can cut down on labor hours? Not labor rate, because you can't start paying people less than you were paying them before. But what we need to do is really look critically at hours and say, can we cut down some hours? That's the very first thing I would say, because that's going to make the most immediate impact to your payroll and to your bottom line. The second thing I would say is you really need to do a profitability analysis on your services to see how much each service is really bringing in from a profit perspective. If you're performing a facial and that facial costs $120, but you're paying the facialist as a contractor to come in and do it for $80, and then you use $5 worth of product on top of that, it's really not a very profitable venture at the end of the day. So you really need to think about how much are you taking in versus how much are you paying out in labor for each salon service. And then you need to look at, okay, if this is just how much I need to pay people, then maybe my prices need to raise or need to be raised up. So I would say that looking at pricing is a very, very, very important thing. Look at pricing, look at hours, see if you can cut anything here, see if there's any way that an individual could be doing maybe a second task instead of having a second person on the payroll for a very specific task. I'm not exactly sure because I don't know what this mix looks like, but I would definitely want to question the number of hours, whether that's working, okay? And then I would say the pricing is more than likely one of the big things that needs to be assessed and addressed, all right? Because there's not a lot of crazy expenses in this business that are pointing to a big waste anywhere else. I'd say the biggest impact that this business is going to have is really digging into their labor costs and really digging into their pricing. And if you can get this model, switched and fixed, it could be wildly successful. And I just want to say to this business owner, they're doing an amazing job, especially in times where, salon services have really been hit hard. But I would really love to see the needle move to get this number closer to 20%. All right. Now, just a quick note on the balance sheet. I do love to see that this business has almost, let's see how many, they spend on average $40,000 per month. So they have almost 2 months of cash sitting in their savings account, which I love, love, love to see that. And if they really needed to tighten down and buckle down, they would be able to cut that significantly, cut the expenses because most of that is payroll anyway. So I love seeing that they have savings. That is great. I also want to point out that they do still have both PPP loans on the balance sheet. So my question is whether or not these have been forgiven. They might have been forgiven, just not written off the balance sheet. So that would just need to be cleaned up. And this loan principal, in order to pay off a loan, and I try to encourage people to pay off a loan as quickly as possible. In order to pay off a loan, you need to have profit. So if you are in that 20% profit range, so let's just say, what would that be? What would 20% profit look like? That'd be $68,000 so far this year. I mean, just that alone could pay off your principal. So I really like the idea of this business owner really, really, really critically looking at labor and pricing in order to get a higher profitability margin on here. I totally think it's doable. And pricing increases are always a little bit harder to introduce than anything else. So I'd recommend doing that analysis ASAP and trying to get prices implemented as soon as possible.
Well, I hope that was helpful to you. I hope it gave a little bit of insight into how you can run your business in a more profitable way, or maybe how you can organize your financials to give you the information you really need to see. So I hope this type of information is helpful to you. Please do let me know what you liked, what you didn't like in the comment section below, and give this video a thumbs up if it was helpful. I love hearing it. You know what? And give it a thumbs down if it wasn't helpful. I like to know that too. I'm totally okay with some nice constructive criticism, or just criticism if you really want to, that's fine too. All right, well, I appreciate you guys. Thank you for being here, and I look forward to reading your comments. All right, bye.